Hey everyone, I've been getting a lot of requests for a video on how I approach my analysis, so I decided to create this guide. Trading is a personal journey, and while some of you might connect with my style, others may have a different perspective, which is completely fine. We can always learn from one another. So, in this video, I will teach you how I analyze the chart and enter a trade. All right. So the first thing I try to look out for is I try to identify the trend. And to identify the trend, what I typically do is I use RSI, this particular RSI, right, with my own settings on it. I think it's a combination of two different indicators. So in a situation whereby the trend is it's an uptrend, right? As I can see, there's a crossover on my RSI. These numbers have been back tested, and this works very well on the pair I trade, which is GU. GU is exclusively the only pair I trade, and I have back tested a lot. So the first thing I look for again is the trend. Now I can tell that it's an uptrend. The next thing I look for is some sort of weak rejection, and this should so you have your candle. Yeah, let's say you have your candle here. um, Definitely need to. All right, so this has been set to extend, so we can just turn that off here. Extend. All right, so you have your candle body, and then we have the candle wick, right? The candle wick. Right. Now what I look out for, I start with the 15 minutes time frame. So how I trade is I go from the 15, right, to 1 minute. So on the 15-minute time frame, I'm looking out for this weak rejection here, just like I drew here, a weak. Now, in a situation where I have confirmed that the trend is an uptrend because of my crossover here, I'm looking for a weak rejection on the sell side. Now, that will be on the opposite end of the candle, right? Not the top end, on the sell side, right? So that would mean this is a weak rejection here, this is another weak rejection here, this is another one here, and you can see there are a lot of weak rejections on this lower end of the candles that formed in this uptrend period, right? According to the my RSI indicator. Now what I am looking for is I'm looking for two weak rejections, two of those. Now this is what I do when I see those weak rejections. Let me expand this a little bit. Right, now we have one weak rejection here. I'm looking for two side by side. Now this is 1 year and this is another 1 year. This is also 1 year and this is another one just by the side, and then I can confirm it's an uptrend. What I will then do is mark this candle, right? Once I mark this candle, I will anticipate. Now I'm marking it twice. I mark it with a vertical one, and I also mark the body, right? In this case, it is where it is the close of the candle, because this is a sell candle, it's a red candle, right? I mark it. Let's make it a much more visible color. Let's use black. Now what I end up doing now is I go to a lower time frame, which will be on the 1 minute. So I go from 15 minutes to 1 minute, and then let's look for that candle we just marked, right? You can make this smaller by just scrolling this bar. Yeah, good, found it. So this is it here. Just wait for the candle to load. Perfect, now found it. Now what I do, right, after marking that body, is I look for what some of you will call a turtle soup, right? I look for a turtle soup. So on that 15-minute candle, right, this is the beginning of that 15-minute candle. So that candle must have, this pattern I do here must have formed somewhere around here. Now what I am looking for is a turtle soup, which is where price comes and it tests this zone, this low, this body that I've marked here, right? It's typically what I am looking for. And I just don't look for that. I also look for, what I also use as a confirmation is what we call an RSI or a RSI divergence, right? Aside the turtle soup, right? So now price came and it tested this. Now I want a divergence as well on my RSI, which is here and here. Now as you can see, there is no divergence, right? Now some people might actually go ahead and trade this the way it is, right? It's a perfect turtle soup, right? Price tested this low. You can see liquidity that's taking liquidity on this side, and then you expect it to go up. My target will be somewhere up here, and then it's a sweet trade. Usually I would say aim for a 1 to 3 risk reward. So I would probably set my stop loss somewhere a little bit outside of this last week, yeah, where price came to and then rejected back up. Somewhere here will be where my stop loss would be, and I'll be targeting a 1 to 3 risk to reward. Some people might take it, but for me, I will not take this trade, and that is because I don't see my divergence. I strongly trade with divergence in mind, because one thing about divergence, when a divergence happens, is it is always a liquidity zone, or liquidity is always high anytime you see a divergence, right? So I'll skip this trade, and that's basically just gives you an idea of what I am looking for. So I'm back on the 15-minute time frame now. What I am looking for anytime I see 2 weeks rejection side by side. Now another example is this one right here, this green candle here with its wick, and this red candle here with its wick. Now you can see that they both have, on my RSI, we're already in a downtrend, right? So these two candles, I would have gone to the 1 minute time frame, look for my divergence, enter my trade, right? And then it would be the previous low. So my exit would have been somewhere here, and I'm looking for a 1:3. I have good spread, a very good spread on this pair with my broker. I'm not looking to go all the way down with the trade or all the way up with the trade. I just trade strictly my risk to reward ratio, and that is because you can't really predict the stock market, and yeah, you really have to trade a system and be very, very strict with that system. Trading is a game of probability, and your money management is still the most important thing. Your strategy can be whatever, right? You can as well flip a coin, to be honest, but of course you have a better edge when you trade a tested system, and this has been tested, right? Your money management is the most important thing, is all I'm trying to say. So this trade, I probably didn't see my entry here, right? But we're still in an uptrend, and I think I can see another one here, right? These are 2 week rejections. Now I stick to one trade a day, and at the same time, I always want to look for the first 2 week rejections I see after my first crossover, right? And that is it. I try not to trade more than once, and I don't trade more than one pair, right? You're looking for maybe 2% a day, 3%, 6%, whichever, how many percentage of profit or TP you're looking to take. I mean, you can just get that with one pair. Stops you from over trading, right? All right, so another one would be these two. So I'm just going to mark this, right? This is where it occurred the first time, and I'm marking this here. All right, so I'm going down to the 1 minute time frame to look for that, where that happened, and look for my turtle soup setup. All right, so here is the zone. So this area here is where, all right, let's just use a brush here. So this area here is where the weak rejections, those 2 week rejections I saw, happened, right? And then on the 15 minute time frame was in an uptrend, right? So what I'm looking for is my turtle soup, right? This first one here, I see a divergence actually. So I would have gone back to the 15 minute time frame. Usually I have my 15 minute time frame open on the side, probably on my mobile phone, or on the side on another trading view browser or account or tab, right? On that trading view tab, I have it open on the side so I can see simultaneous what is happening, right? So I'm assuming now, right, of course, that these are the 2 week rejections I saw, and I would most likely have entered this trade here because of this small divergence here. You can see on my, okay, I need to disable the brush. You can see on my RSI that price, the RSI levels were ticking up while price was ticking down somewhat. Yeah, so you can see a divergence. Yeah, I can't even remember the names of all of the different kinds of divergence. There was a time and I remember all of these things, but yeah, that is what it is. So I would have entered on this bull candle. Yeah, I would most likely have, if I was somewhat impatient, right, I may have entered on this first green, yeah, right, or I would have entered on this second one here. I respect my stop loss a lot, right? So regardless, my stop loss would have been somewhere down here, and I mean, if the first one had not gone up, my way, it might have come back to his stop loss, and I don't ever get any hard feelings when that happens, because again, it's a game of probability, and I always know that I have entered at the most optimal time that I think I can. And if that doesn't go my way, I wait for the next day to come and I try again. The same system, the same strategy. Important, the money management, 1 2 3. Now, maybe I would have waited for this second one, yeah, using this base for my turtle soup, or this one, right? So when price comes up and it closes up on this candle, right, I might have waited for this and I would have entered, and my target would have been up here, right? And that would have been one trade for me for the day. Now, if I had missed that and I had marked this level, I go and I come back, I check the 15 minutes time frame, we're still on an uptrend, and then I see this price action, yeah, where this level here, price basically violated this and then goes back up and closes above this. I love this kind of setup, right? Because I've seen that price has engineered liquidity a lot to the left, and when this happens, it just gives me that confirmation that, you know what, price is going back up to this high, yeah, this higher high that we made here, right? So I would have entered my trade again somewhere here on this candle. Here would have been where I would have entered my trade, and my stop loss would have been somewhere under this candle down here, right? I just give a little bit of gap under my current, where the current low is. 1:3 would have been my target, right? So that will be long position. My entry would have been on this candle, yeah, on this candle here. To be honest, I think my stop loss is usually way tighter than this. Actually, my stop loss is always tighter than this, so which is why I really thought that I might have been taken out if I had entered, say, somewhere here earlier, right? Because I try not to wait for, so I might have been taken out if I had entered this. But yeah, I think my stop loss would have been somewhere here, to be honest. And then I try to trade to the next high, right? I would probably take some off and then write this to 1:3. Wait, okay, which is what it is already. Yep, 1:3. So this is a typical, trade entry for me. Very tight stop loss, 1:3, and I enter with a divergence and 2 weak rejections, sometimes 3. I'm sure this entry would have been the third one. If you're not being aggressive, I always advise you wait for the third one. The third one is always the charm, right? It's always the charm. And when we go back to the 15 minutes, I can assure you that this entry was on the third week rejection. Let's see. Okay, I'm assuming the time, the extension on that entry was too short. So let's just drag this out. All right, 15 minutes. All right, trade was probably, the number of pips was probably too, I'm looking for the vertical thingy. Hold up. Okay, let's move those back. Yeah, perfect. Yeah, it was the third one, right? So yeah, the third one, and that's it. You wait for three 3 week rejections. Two, you enter on the third one, right? That's it. And that is how I enter my trades. So we took our profit here, and that was it. Sweet trade. All right, guys. Thanks for watching, and I'll see you in the next one.